Welcome. You're viewing the Pirls Stock Market Commentary video for November 22nd, 2015. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.81 rose from 0.59 last week, yet remaining in bearish territory. The total count of securities in bullish or bearish patterns fell fractionally to 2,856. The count of bearish stocks decreased 12%, while the count of stocks in bullish patterns increased 20%. The Pirls P&F Market Breadth Summary Chart shows us a market now 25 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive a free market commentary subscription via email, simply enter your email address in the provided spot. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 60 points for the fourth decline in 12 weeks. At a negative 144.64 points, it continues below all 7 tops above plus 100 and continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on lower average daily volume. Momentum. At a positive 58.31, the CCI 20 daily has increased from minus 81.62 last week, rising back above zero after 5 consecutive days below zero. A possible zero-line reject inflection point had a less step pivot out than in, as well as being outside the plus or minus 50 range, preventing a long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 9 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. The CCI 20 weekly continues in a Woody's down after a zero-line reject short entry point last week. It has risen up this week from plus 32.35 to 52.36, moving against our trade, but not above the zero-line reject inflection point of 86.34 the prior week, so we stay in the trade. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 industries are negative. Bullish gold and silver continues in the bottom 5. REITs has entered the top 5. Oil services has entered the bottom 5. Bearish disk drives continues in and now leads the bottom 5. Computer hardware continues in the bottom 5. Brokers and KBW Bank have left the top 5. Focus this week from www.zerohedge.com, global trade just snapped. Container freight rates plummet 70% in 3 weeks. The following are some key points and data in graphical form. At a time of typical seasonal strength for freight and thus global trade around the world, Reuters reports that spot rates for transporting containers from Asia to Northern Europe have crashed a stunning 70% in the last 3 weeks alone. This almost unprecedented divergence from seasonality has only occurred at this scale once before, 2008. It is looking scary for the market, and it doesn't look like there is going to be any life in the market in the near term. The spot freight rates for transporting containers, carrying anything from flat-screen TVs to sportswear from Asia to Northern Europe, has fallen 70% in 3 weeks. Even more concerning is this collapse is occurring just as the containerized freight industry enters its golden seasonal period. The clarion calls of the status quo everything is awesome optimists is that this has nothing to do with demand, but is merely due to oversupply of ships. Supply has surged, but only thanks to totally manipulated and decoupled from reality signals from markets that caused firms to massively malinvest in building ships for the renaissance of global trade, which never happened. In fact, as the chart above shows, growth in global trade has been slowing down for some time. Instead of economic strength and robust growth, economic fundamentals are breaking down. Manufacturing is slowing. Consumer spending is soft. For additional edification, just look at copper, iron ore, or aluminum. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up. Hoping also that you enjoy a delightful Thanksgiving holiday this week, and wishing you true success.